Today I would like to analyze General Mills, one of the biggest food companies in America. And when we take a look at the stock price, we can see we are up close to 10% in the 5-year charts. But from the 2023 highs, we are down close to 35%. So it's look interesting, and we're going to take a look at the financials to find out if this company is actually undervalued right now. So the first thing we can recognize about General Mills is a market cap of 32.25 billion US dollar. So this is when we take the current stock price multiplies with the shares outstanding. And I would say it's already a big company, which can limit the growth in the future. We also have a dividend yield around 4.05%, which is, I think, a good dividend yield. And we can see here, they did increase the dividend many years in a row already, and I think in a good rate as well. So about the dividend, it's looking good. And we're going to take a look at the financial foundation to find out if this company is undervalued. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining. So we can see here in 2020, it was around 17.63 billion. Then we have the slow increase around 3%, then close to 5% increase, then close to 6% increase, and then we have the decline in 2024 around 1%. But overall, as a check from here, we have a revenue growth in the last 5 years. Now we're going to take a look at the free cash flow. We want this to grow as well. This is very important because the free cash flow can be used to buy back their own shares, to pay the dividend, to invest in their own business, or to pay back the debt. So we can see here in 2020, it was around 3.22 billion. Then we have the decline in 2021. Then we have increase again around 12%, decline again in 2023, and then we have the increase again. But overall, we are down from the 2020, and it's not a check here for me. Now we're going to take a look at the free cash flow yield. We would like to see that over 4%. This also can tell us about the valuation of this company. So if it's under 4%, it could mean the company is overvalued right now. So what we're going to do is we're going to take the free cash flow from 2024, around 2.53. Then we're going to divide it with the market cap, 32.25. And then we're going to get the free cash flow rate. So the free cash flow yield is around 0.0784, which means around 7.84%, which is a really good yield, I would say. It's over 4% and it looks undervalued for this company. It's a check here as well. The next thing we're looking for is debt to free cash flow ratio under 5. This means we can pay back the debt with our free cash flow in under 5 years. This is a very important number because if a company has too much debt, it can risk to go bankrupt, and we don't like to see that. So what we're going to do is now we're going to take a look at the short-term debt. Here in 2024, around 1.73. Then we're going to take a look at the long-term debt, around 11.3. And then we're going to divide it with the free cash flow that we had. So then we're going to get the debt to free cash flow ratio. So the number we get is around 5.15. So a little bit over 5 years, we can pay back the debt with our free cash flow. It's not bad, but it's still not a check. We would like to see that under 5. We can take a quick look at the cash on hand as well. We can see here they have around 400 million cash on hand, which is not bad. But some years ago, they had more money. So they spending a lot of money, probably for dividends or for stock buybacks. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. This can be especially good when the company is overvalued in our opinion and they buy back their own shares. it can help the stock price to increase. So what we're gonna see here, now 4 years in a row they did buy back their own shares. Here in 2018 to 2020 they increased the shares outstanding, but they have many years where they did buy back shares, especially in 2024, around 4% decrease of the shares outstanding, which is a big number. We can see at the cash flow as well that they buy back their own shares. Here we can see how much they spent on the dividend, around 1.2 billion in 2020, and this increased to 1.36 billion. And here we can see how much money they spent on stock buybacks. And yeah, in 2024 they spent around 2 billion. This is a big number, and I think yeah, the free cash flow is lower than the stock buyback and the cash dividend. So they use some debt to pay their stock buybacks. This is something we not really like to see if the interest rate is high, and I think it can be risky if the company has too much debt. But for me as a check here, I like to see that they buy back their own shares and they have a strong free cash flow yield, which is also good. Could indicate that the company is undervalued. I would like to give my conclusion about this company. So let's start with the positive. They have a revenue growth in the last 5 years. They have a high free cash flow yield around 7.84%, which can indicate that the company is undervalued. They have a high dividend yield around 4.05%. The negative would be the free cash flow decline. And I would say the supermarket brands that can offer similar products but way cheaper.